Friends, welcome to Yadnya Investment Academy. In today's video, we're going to see what are bonus shares. Whenever a company announces a bonus share issue, number of shares held by the investors increase in a proportion. For example, 1:1 bonus share means that for every share held by you, you will get an additional share. So your number of shares would double. For example, let us say before the bonus share issue, if you had 100 shares in a certain company and the company announces 1:1 bonus, you will now have 100 additional shares. So your total shares would now be 200. A 2:3 bonus means that for every 3 shares held by you, you will now get 2 additional shares. For example, let us say you had 30 shares in a certain company before the bonus share issue, you would now get 20 additional shares from the company. So your total holding in this company would be 50 shares. Now, bonus share announcement does increase the total number of shares you hold, but the value of your investment remains the same. Let's see how. Let us go back to our first example where we had a 1:1 bonus share. So before the bonus share announcement, you had 100 shares. Let us assume at that point in time, the price of the share was rupees 100. So after the bonus share announcement of 1:1, the price of the share would also be halved. So before the bonus share announcement, the total value of your investment was 100 shares into rupees 100, which gave us a value of 10,000 rupees. And after the bonus share announcement, your total number of shares, that is 200 into the stock price, which is rupees 50, gives us a value of investment of 10,000 rupees. So if the value of my investment remains the same, is it really a bonus? Well, yes, it benefits you in two ways. The first is that the stock becomes more tradable. Now, as I'm making this video on 14th August 2018, the stock MRF Limited is trading at 73,830.05 rupees. Now, this is a very expensive stock. For new or small investors, it becomes difficult to buy such expensive shares. And so, to increase retail participation, bonus shares are announced. So after the bonus share announcement, the stock becomes more tradable as more investors can invest and the stock would see more activity on the stock market. Whenever a company wants to share its profits with its investors, it can do it via two ways. The first is by giving away dividends and the second way is by issuing bonus shares. So this is our second benefit. Let's understand this point in more detail. Let us go back to our first example where we had 1:1 bonus share. So after the bonus share issue, the market price of the stock was halved, but the face value of the stock remains same. So if the face value of the stock was rupees 10 before the bonus share announcement, even after the bonus share announcement, face value remains same. So after the bonus share announcement, you own 200 stocks with a face value of rupees 10. So you are getting these 100 bonus shares at no additional cost. There is something called as share capital seen on the balance sheets of a company. Share capital is nothing but the money received by the company by issue of its shares. Now when a company declares bonus shares, the total number of stocks go up. Share capital is calculated by multiplying face value into total number of stocks. So when the total number of stocks go up, the share capital also has to go up. But you have not paid anything to increase this share capital. So what does the company do is, it moves a part of its profits, that is bonus shares, into face value to this share capital. You can also say a part of reserves have been moved. Reserves is nothing but the money kept by the company to itself to run the company on a day-to-day basis. So what is the benefit of bonus share issue to the company? Bonus share issue increases the equity base of the company. Equity base is nothing but the total number of outstanding stocks. The stock also becomes more liquid, active or tradable on the stock market, and a bonus share issue displays the amount of confidence the company has to service a larger equity base. Let's look at the taxation part of bonus shares. As bonus shares have come at no additional cost, While calculating capital gains, you'll have to take the acquisition cost as 0. Let's take a quick recap of what happens after the bonus share issue. The market value, that is the stock price, reduces in proportion to the bonus shares issued. Face value remains the same. The share capital increases by face value into bonus shares issued. Reserves decrease by face value into bonus shares issued. The total shares increase in proportion of the bonus shares issued, and the value of your investment or the market cap of the company remains same. So friends, that was all on bonus shares in this video. Hope the video has been useful. Thanks for watching this one. Watch this space for more such topics. If you have any questions, do let us know in the comment section below our videos. And if you like our videos, please do subscribe and share. Before we end, we want to let you know that you can create your financial plan for free on our new portal. Our new portal is investyadnya.in. So please try it out. And you can buy our first book, which is a collection of 108 questions and answers on mutual funds and SIP on Amazon, Flipkart, etc. And the link to buy the same is mentioned in the description of this video. So see you in another video. Until then, happy investing.